Hello friends, welcome. Friends, in this video, I am planning to do a deep dive on India's GDP numbers. Not only what was announced yesterday, but what are the trends in back in time and in future. So in order for me to do this analysis, I have created a dashboard. Let me explain to you how this dashboard works. Now, dashboard is a menu-driven dashboard where various dimension and metric can be chosen. The first choice that you can make is between these four different dimensions: GDP constant, GDP current, GVA constant and GVA current. And then once having made that choice, then you can choose a particular metric corresponding to that dimension. You can choose value in rupees lakh crore, or you can choose value in US dollars. You can choose growth in US dollar, growth in rupees and growth in US dollars. Then you can choose a particular time scale, whether you want to choose quarter or year. Then you can choose the number of time units that you want this graph to show you at a time. So currently I have chosen 30. So 30 quarters are being shown at a time in this graph. And then if you want to zoom in to a particular quarter, then you can use this menu and you can choose a particular quarter. Let's say if you want to zoom in for quarter number 1, then you can choose quarter number 1, the graph will get zoomed into quarter number 1. Or if you want to choose quarter number 2, it will get zoomed into quarter number 2, right? Which gives us some ability to look at what the trends are and what is likely to be in future. Then this particular portion of the graph has time scale, which is here on x-axis, and the various dimensions within that particular chosen metric of GDP. Like we have chosen GDP constant. Now GDP constant, the first part is the total aggregated GDP of India quarter by quarter, right? Starting from April 16, that is the first quarter of FY17, right? And then till the last quarter, which was announced yesterday, which was quarter 2 FY24. Then we have 1, 2, 3, 4, 5 dimensions. There are 3 more dimensions which I have excluded from this chart because those are insignificant. So the first is private final consumption expenditure. Then we have gross fixed capital formation. Then we have government final consumption expenditure, export and imports. Now after having explained how this chart looks and how the chart will function, let's go into the details. The first detail to note here, because the first selection is GDP constant in value in rupees lakh crore and on a quarter basis, you will notice that the GDP trend had been, though it had been increasing, but there was a slowdown here, right? Starting from the first quarter of FY19. If you see that the trend was going down. So even before the COVID was hit, our GDP was not performing to its maximum potential. It's clearly visible from this chart. That's why the growth numbers quarter by quarter was slowing down, which is not a good sign as far as, so we should be aware of that. Then what happened? Unfortunately, COVID was hit. And then this particular trend, which was already in the slowdown mode, further got aggravated because of COVID. Now you see that in the second quarter of FY21, the growth was minus 5.6. Because even if you forget this growth, because this was an very abrupt and abnormal event, so forget about this. So in FY21, first quarter of FY21, it was minus 5.6. Then it was 1.7. Then 3.5. Then in April 21, because of a very low base, the growth was very high, 21.5%. Then in quarter 2, which is for FY22, which is July 21, the starting month of quarter 2 of FY22, the growth number was 9.1%, and then it was 5.2%, then 4%. So what I'm trying to tell you is that to measure growth, it is important to look at the base. And what is that base? The base is the corresponding quarter of the previous financial year. So when we get euphoric about a particular growth factor, we have to notice the trend. We have to look at the trend and what was the base on which this growth is measured. Because by looking at a particular quarter does not give us anything unless you look at the trend. The full trend has to be visible right in front of you to make a clear judgment where we are going. For example, if you see this, the last quarter which was reported yesterday, the growth was 7.6. So it is measured with respect to what number? It is measured with respect to this number, which is 38.8. So 38.8 lakh crores was the reference on which this growth is measured. Now, if you look at this 38.8 lakh crores and compare this with the July number of the earlier year, you will find that this is quite a depressed number. So let me just choose Q2, so you will get a very good understanding where it is going on. So if you look at the Q2 numbers, you will find that, let me just also change the time scale and make it a little bit bigger, so that you can get a very good understanding as to quarter by quarter Q2 what is going on, right? So let's start from the very beginning, right, of the series. So you will find that it was increasing, and suddenly the increase was depressed because of COVID, right? 35.5, then it went down, then 36.6, barely we basically crossed 35.5 in July 31st, right? And then the number in the next financial year, which was FY23, was not that significantly high, right? So it was not very significantly high compared to, because the growth number was 6.2. You see, that is why we got a lower base. So it might give an impression that the growth is higher, but though there are a lot of good things to talk about, but you should be aware of that. Look at the base from where the calculations are made. Very important to understand that. Okay. Now let's look at the other picture. Let me just bring the picture back here. Now, one of the important aspects to notice here is that the private consumption is actually picked up. Though it has not picked up significantly, but it has picked up, which is a very good sign as far as India's GDP is concerned, because the most of the contribution of India's GDP come from private sector final consumption expenditure. You see, this is a 23.7 lakh crore in a bucket of 41.7 lakh crore. So if the private sector the growth does not picks up, then we are doomed. We are going to have a huge problem. So let's focus on the private sector consumption expenditure. But though the growth has picked up, but it has not picked up substantially. You see that these numbers are not growing like this. It is almost like flat. The fourth quarter numbers are always high, but after the fourth quarter numbers, the numbers are actually going down. So it is not a consistent growth, right? The quarter by quarter numbers, you will find that all the 4 quarters are not growing at the same rate. It's not consistently growing. You have to since you are comparing the earlier quarter, it is, sometimes you get a very false impression. So let's look at the bigger picture quarter by quarter. Then the biggest positive point here is the gross fixed capital formation, which is actually showing a rising trend. It is much better than the private sector consumption expenditure. If you look at these numbers, it is much better than what we are seeing here, because here it is 23, right? In the July quarter of FY23, it is 23.7. It's not a very significant growth, right? That's why it is 3.1% growth in the corresponding 7.6%. However, gross fixed capital formation number is 11%, right, on the overall growth, because the earlier number when we are comparing is 13.7, right? That is the base on which we are comparing it, and we are calculating the percentage. It is 11%, so it's a significant growth. Then the government final consumption expenditure is showing a very poor sign. So government is not making expenditure. Their expenditure, because if the government expenditure also became significantly better, we can beef up our GDP significantly. So we are not performing well. Though it had been a trend from the very beginning that the government final consumption expenditure hasn't shown a very good sign, but still we have lot of scope to improve here. Look at this. If these numbers go up, how much boost that this number can cause to that number. So look at that particular point and understand this, and which will be very significant to appreciate the larger number of 41.7 lakh crores. Then one of the most important problem which I see is the rising imports. Now, if you look at this line item, you'll find that the imports have been rising and exports also have been rising, but the net import minus export, that is the net import export numbers, are actually rising, which basically shows that our exports are not able to cope up with the rising import in order to boost our GDP. Because in GDP number, what happens is that export gets added up in this number, that is 41.7 lakh crores. The export numbers will get added up, but the imports number, which is 12.5 lakh crores, will get subtracted. So if our imports are higher, this number is going to be pulled down. So we are very concerned. So we have to be very concerned about this number. If you see that the this net import minus export, net import export number is 2.86 lakh crores minus. And in the last quarter, which is the Q1 quarter of this particular financial year, it was minus 2.58 lakh crores. So if you compare with the previous quarter, which is basically July 22, that is the second quarter of FY23, you will find that the number was lower here. Here the number has increased. So it's a very, very significant concern, and if we really want our GDP to grow and exponentially grow, we have to look into this particular aspect, right? So this is on a high level what the GDP story that it tells, right, from the picture that we are basically getting. Now we can do one more thing. What we can do is that we can look at the dollar numbers, because the dollar numbers also are very, very important. So in order to do the dollar numbers, what we have to do, you have to basically do USD and then choose GDP current, because GDP current is the nominal GDP on which if you divide by the dollar rate, it will give you the dollar number. So these numbers that you see in dollar are in billions of dollars, right? So it is 862.8 billion dollars. So from a dollar point of view, the growth rate is 7.1%. Now, if you compare the dollar growth quarter by quarter, you will notice that there is, because let's go to the rupee gold again, and we will see that how the dollar growth compares with rupee gold. Let me just go to constant and choose rupees. So if you see that the rupee growth is showing a little rising trend. However, the dollar growth, if I go again GDP current and I choose USD here, so you will find that the USD growth are basically tapering out. It is not, so the earlier quarter's number, you will see that, let's say if you take the quarter number of the last third quarter of FY23, it was 2.4%. Then the first quarter the fourth quarter of FY23 number was 2.2%. The first quarter was 3.9%, but this quarter the number is better. Why it is better? Again, the lower base. You see, July 22, the base was lower. So it is giving as an impression that the number is higher, right? The private sector consumption is also telling a similar story, right? The numbers are better, but it is not significantly better, which we want it to be. Now, coming back to the import-export numbers. If you the net import, so you see that the net import-export numbers were worse in the previous financial year. If you look at this number, it is minus $42.99 billion of net import-export loss that we have committed, which is pulling our GDP down. This lower base of 805.2 is because of this. This number was very low, and that's why we are getting a feeling of 7.1% growth, because the numbers were very bad here. So we have been able to contain the import-export numbers for this particular quarter. Therefore, this number has gone up, $862.8 billion, right? So you can imagine that how important it is to contain our imports. We have to do something more, in order to contain our imports and bump our export, so that our GDP in dollar terms, the numbers are become much more stronger. Because let me do one more thing so that you understand where we stand as far as yearly numbers are concerned. Because if you look at the yearly numbers, the FY23 from a dollar point of view, if you just consider the last financial year, which ended in FY23, it is $3.347 trillion. So our aim is $5 trillion, right, of economy. So the numbers are still way off compared to the target that we have. So even in the next financial year, we probably will not reach a $4 trillion economy. So we still have to cross a lot of ground in order to reach $5 trillion economy. Why? Because of this. Look at this. Minus $22.5 billion of gap up between import and exports. So the import numbers are pulling down our GDP. So if we are able to contain our imports, I am quite confident that our numbers are going to shoot up. That's where the focus should be, to drive up the exports and contain our imports. That only then we will be able to meet our target of $5 trillion GDP as quickly as possible. If our imports increases, and if we are not able to contain our imports, this number is going to be very difficult to achieve. The other important factor why these dollar numbers are not bumping up to our expectation is the weakening of rupee. And it's all attached to the import, because more the imports, more the rupee weakens, because the demand for the rupee goes down and the demand for dollars increases. Because of that, the rupee value, rupee depreciate, dollar appreciates, and that puts down the overall GDP number. So in friends, because I really don't have much time, to talk about this video, I'll try to basically put this chart out in my website. You can play with this number, because there are a lot to talk about. Because we can talk about the other metric, which is the GVA numbers. Now, if you look at the GVA numbers, let me just do a quick summary of the GVA numbers. But the chart is looking a little cluttered here. But if you look at, let me just do a smaller, quarter. Let me do a quarter so that it becomes much clearer than where we stand. And I will choose a shorter time period, let's say 24 months. And so if you look at the quarter number of a 24 months, you will find that where the problems are. Here you will be able to see the problem. The problem is where? The problem is in the agriculture sector. You see, the agriculture numbers are drooping down. They are not growing significantly. We are still, struggling on agriculture, right? Where we are doing great is defense. Look, defense, we are going very high. Construction may be fine, we are not doing great, but it's okay, because it is also a very big symbol as to what manufacturing probably is also good. I would not say significantly better, but it's good. If you look at this number, the trend is, it's kind of fine, but it is not going very significantly better. Where we are doing great is the financial services, and we have been historically doing better in financial services. So friends, anyway, I just have to stop this video here, otherwise it will go very, very, people will not watch it, because as the minutes increases, the watch time also decreases, and you will not find it very valuable. But there are a lot of things to be talked about, but I just gave you the high level insight as to what we need to look in order to evaluate our GDP. So I hope that you found this video useful, and if you have any comments, let me know in the comment section. And thanks again for your patient listening. Thank you very much. I'll come back to you the next video next time. Thank you very much.